Welcome to the weekly close live here on the Passive Income Podcast. Joseph, how have you been this week?
Dave, I'm not going to lie to you. It's been a bit of a week, but it is Friday. I am off work and we're live, and that's what matters.
Yeah, like I was saying before we went live, as you know, every Friday I'm super stoked about it being Friday.
Hey, how do you not? 2 days of freedom.
Yeah, exactly. Yeah. Is that 2 days of financial freedom? Not really, right?
No, not even a little bit. No. If you manage your money right, no. If you got paid today and it's going to be all gone on Monday, then I guess so.
Right. Yeah. Um, Before I pull up the closing numbers for the week and ask you to plug something, did you notice that last Sunday? So you remember a week or so ago, you were like, "Oh, you can go to New Zealand and Austria," and I was like, "That's 24 years ago," and you were like, "Oh, you can't even come to the U.S." Last Sunday, I crossed the border for the first time in years.
I was going to bring that up on this call. I saw that. It didn't look like you got far, but I did see that you went.
That's right. Yeah. So I crossed the border, and so the closest border crossing to where I live is about an hour and 20 minutes away for me to drive on the Canadian side to the bridge to cross the St. Lawrence River. And then once you cross the St. Lawrence River, the first sign I see is Watertown, upstate New York, right? 27. And my first thought is, oh, that's 27 miles. Not kilometers, obviously, right? All of our road signs are in kilometers.
Yeah, we like doing things in our freedom units down here.
Yeah, well, with that said, too, so again, before I pull this up, we'll get going here soon, shortly. That 25, 27 miles from the border to Watertown, it is the absolute most boring stretch of highway in all of North America. There's just a whole lot of nothing there. Just absolutely nothing.
100% believe you on that one.
Yeah. Watertown is a nice little small city in upstate New York. They have everything. I don't even know the population, probably around 50,000, maybe more, 70,000. But they have everything, right? Like your Home Depots and your they have a nice big mall there. The mall basically caters to cross-border Canadian shoppers. I saw a Dollar General, I saw a Dollar Tree, I saw a Chipotle, and I'm like, "Yep, this looks like the good old US of A."
I would say that's all we got.
All right, give me a second to pull up the share screen and we'll get into the closing numbers. And while I do that, you know what you get to do. Go ahead
It
and
is
plug
time.
Marketplace or anything
Yep.
else.
I guess it's got to be Marketplace because I don't know. It was like 2 months ago. I plugged my own YouTube channel, and I am no closer to a video now than I was back then.
Right.
I really need to get back into that. I really want to. I don't really need to. I want to get back into that. But yeah, marketplace.com coming out later this year. I still don't know how much I'm allowed to say. There is going to be an app, and there are a lot of NDAs flying around, and we paid a lot of money for legal counsel to make sure what we're doing is legal. So that's my way of saying it's new, it's exciting. Oh, and I'm
Yeah,
so
that's
excited to
awesome. Yeah,
launch it.
don't say anything that's going to get you into trouble. So, with that said, I'll cut you off before you do say something that you're not supposed to say
Yeah.
with all those NDAs. And we'll get right into the closing numbers. The TSX this week, I do not know what happened today. Down 222 points today, but still closing the week above 22,000. So a pretty solid week for the TSX composite index here in Canada, the Toronto Stock Exchange. We'll quickly fly over to the S&P. I know the S&P also had quite the week.
It did.
I'm gonna flip onto the 5-day here. Oh no, I'm sorry, I'm still on the 1-day. 5-day, yeah. So wow, like look at this week on the S&P 500. Monday afternoon
Hey,
down at 52.39, and then closing the week at 53. Well, I'll call it 53.47.
see if that's not a record, I don't know what is because I feel like we're getting very close to it. I know we got to be flirting with it.
Record for an all-time high, you mean?
Yes, sir.
Yes. The Dow Jones Industrial Average closing the week at 38,007. Well, we'll call it 799 again. How did they both end up on 0.99? That's strange.
Just kind of nice after what anybody who watched last week and the returning viewers. Ooh, what the Dow did last week was a lot of fun for everybody involved.
And so here we are showing
Ooh.
how much that trip to the U.S. really cost me. I was only in the U.S. for about 4 hours. I hate when it does that. Did you see that? It was giving me the 4 decimal
72.65.
places, then it went down to the 2. So anyways, it looked like we were just below 73 cents to the US dollar for a Canadian dollar. Crude oil closing the week at, and this is in USD, 75.38 on the New York Mercantile. Bitcoin never closes. Of course, I'm on yahoofinance.ca, so this Bitcoin price is in Canadian dollars. It's not clicking over to Bitcoin. Oh, I've got the spinny wheel. There we go. Bitcoin.
Roaring Kitty broke it.
Yeah, 95,499 in CAD. I do have that pulled up on CoinMarketCap as well. If we stick around long enough, we'll get to the price of Bitcoin in USD as well. But it's been on a bit of a tear this week. Oh, am I keeping you up, buddy?
I think I posted about this. We moved this week, and the dog's starting to adjust to the new space. And also, they just discovered the neighbor's outdoor cat. So as you can imagine, we're getting up 2 or 3 times at night to go on cat patrol.
Nice. Gold closing the week, and this is in USD at $2,311. We will. What happened here? Where did we go? Yeah, the Nasdaq is next. The Nasdaq closing the week again in USD at 17,133. A lot of red today in the markets, but the 5-day a lot of green. So interesting week, right? I don't know. Was it the Roaring Kitty effect today in the markets? Who knows?
I mean, we gotta hit GME earnings. I'm not ready for that. We gotta hit GME earnings.
The FTSE over there in London, across the pond, our friends to the east of us over there on the other side of the Atlantic, in Great British Pounds. I'm going to call them quid. 8,245. Their 5-day, a lot of red on their 1 day, and red on their 5-day by the looks of it. So not really sure what happened over there in England this week. And of course, shout out to Akito, our one Japanese viewer,
who's totally real,
who is totally real, and everyone knows it. The Nikkei closing the week at 38,683. And then for fun, we'll just see how I cannot afford to travel to Europe as well. The Canadian dollar, 67 cents, going, not going my way if I were to want to go to Europe. So,
well, unfortunately,
all right,
or maybe fortunately,
those are the closing numbers for the week. Let's get into some of the earnings. What do you think? Where are we going?
Sounds good. Sounds good to me. This is really a who knows kind of week.
Back and forth on Twitter this week, or X, whatever we're calling it. We're back kind of into the boring companies, the not so popular ones. There's obviously still some interesting things to talk about. And obviously the big news of this whole week is what happened today with, like you said, already alluded to, the GME and GameStop and Roaring Kitty live stream. But with that said, let's get into Monday. Before open on Monday, SAIC. Don't know. Any idea what that is?
I do not.
All right. After close on Monday, GitLab.
See, GitLab. I mean, Bark, is that BarkBox? Out of curiosity, there's no way they're. What does Bark do? I mean, obviously it's dog something.
I think it might be. I think it might be that BarkBox that you're.
I've got it pulled up. So let's just hit BarkBox real quick. Down 10% today for some reason. Down about 1% on the week. They've really done this for some reason. Wow, I've never seen this before, Dave. They lost 0.3 cents per share. That is, they lost 1/3 of a penny per share. I've never seen it go out to 3 decimal places before.
Yeah, that is almost weird, right?
But they did beat earnings, expected to lose a cent. They only lost 1/3 of that. That's the
Good for them, right?
that's the extent I've got to say about it. They're up 66% year to date. Wow. But way down from IPO back in 2020. Okay. If you know anything about Bark, please let me know.
Yeah, for
But
sure.
moving into the one that I can talk about, let's hit GitLab real quick. GitLab has had quite the week. GitLab's been having quite a time, down almost 30% on the year, 7% year over year, down 43.5% since IPO back in 2021. But getting back in the week, they're down 10.7, call it 11% on the week, with 1.5% of that coming today. They did actually beat earnings. Expected -4 cents a share, came in an actual 3 cents a share. So for anyone playing along at home, that is surprise profitability.
That's 7 cents difference, right?
It is
Negative 4
7 cents
to
difference.
+3.
Yes, sir. So surprising profitability. Revenue actually up 33.3% year over year. And also beat estimates by about 3 million, which we're talking revenue of 170 million, 3 million. What, a 0.5%, maybe? I think I'm doing bad at math on that. But yeah, basically, what's got them down again? Hey, we've talked about this a couple times before. Bad outlook. GitLab, kind of like what we saw back with, was it Shopify maybe? I don't remember exactly who it was. They're actually doing really, really good at retaining customers. But they're struggling to find new customers, which when you're talking about a growth-based company like GitLab, who's still relatively pretty small in the grand scheme of things, I say is they're a 7 billion market cap company. You got to get new customers in. You got to grow. You got to grow the top line, and unfortunately, you're by just nature of their business model, the recurring customer is only going to spend so much money on the platform. There's a bit of, I don't want to call it a cap, but there's a cap.
Yeah. Are we done with Monday already? Are we jumping to Tuesday?
We are 12 minutes into this, and we are done with Monday. That might be a new record.
Okay. So, before open on Tuesday, we got Bath and Body Works, Ferguson, Donaldson, Corin, Maine, Designer Brands. What do you got for before open on Tuesday?
You know what? I'm going to pull up Ferguson. This is my first. I have no input on Ferguson, really.
At this point, you're just curious about it? You're like,
yeah, at
let's
this
see what
point,
this is.
Ferguson, UK-based company. Founded in 1887, trading around $200 a share, down 2.7% on the week. Hit earnings on the nose, $2.32 a share actual, $2.32 a share estimated. What do they do?
That's a great question. What do they do?
It's plumbing and heating products for contractors. Yeah, they work in a lot of the contractor market. Okay, sure, sounds cool.
Yeah.
We're gonna do what we call pandering for the next half hour. But that's all I got for before open, and I can kind of talk CrowdStrike a little bit.
Yeah, after close Tuesday, CrowdStrike, Hewlett Packard, Sportsman. Yeah, CrowdStrike is obviously the big name there after close on Tuesday.
So I'm gonna be honest. Remember what company was it like last week? Salesforce, where you said, "What the heck? What the heck do they do?"
Yeah,
I understand Salesforce. I don't understand CrowdStrike. I hold a gun to my head right now. Ask me what CrowdStrike does, and I've got no idea.
I'm in Canada. I can't get it.
I'm in America. They basically give them away at every Walmart.
Yeah, you're like, oh, you bought a case of Diet Coke. Here's your gun.
Yeah. Hey. any of our listeners in Texas, you guys know. That said, CrowdStrike, before we get canceled or something over here, like YouTube copyright or whatever they call it. up about 14.5% on the week. Pretty good week for CrowdStrike. Actually, like a massive jump after close today. I don't know exactly why, but it sure was. CrowdStrike, though, looking into their earnings call, did slightly beat earnings, 96 cents a share actual, over 89 cents a share expected. Analysts think very, very highly of CrowdStrike right now. We saw that solid. We saw a revenue beat. We saw a earnings beat. But the most important thing that we kind of look into, CrowdStrike raised their estimate for the next year. Not a whole lot, but went from guidance around 958 million to 961, which kind of, again, right now. Oh yeah, and also for 2025 as a whole, sales looking at originally said 3.9 billion. Now they're saying 4.1 billion, which 200 million. That's what Dave makes an hour at his day job. That's about half of what we get paid for each of these episodes, but still a pretty solid little game there. And right now, when we're seeing so many companies fall so hard on lowered guidance, even a little bit of a raise gets Wall Street excited.
I am suddenly very disappointed in myself because I just realized that last Sunday when I was in upstate New York, I did go into a Walmart and I only walked through like a little bit of it. Like I was not in there long. I bought some Feastables Mr. Beast bars. And then as I tweeted out about them, people are like, they're available in Canada now. And I was like, no, I did not know that. But I'm disappointed in myself because I did not make it to the gun section. And I can almost guarantee you it was in Fort Drum, New York, right? Like Fort Drum, a military town.
I was like, if it's got Fort in the name.
There had to be a like huge gun section. I did not make. I just realized that right now. I was like, I could have went and looked at probably some really cool guns. Not that I could buy. There's no way I could get it back across the border. But anyways, that's just an aside. I could have at least went and looked at them.
I had a joke to make there about smuggling it across the border, and I realized that's kind of not the thing I want to make. That's not the joke that I want to make in a live recording format. I would very much like to come to Canada one day, and I don't want this podcast to be what ruins it for me.
Right? Yeah, don't do that. No. Okay. What else do we have on Tuesday there after close? Anything, or are we skipping to Wednesday right away?
I'm down to skip to Wednesday. I don't know anything else.
This is going to be the shortest week ever, unless we talk about Roaring Kitty all of Friday afternoon.
Oh, it's going to get.
It looks like there's some more interesting things here on Wednesday before open. Dollar Tree.
If you think this episode's short, come back next week.
Is it even?
We've got Adobe, Oracle, and a bunch of things that I've never heard of.
Oh, fun. Dollar Tree. You must have something for Dollar Tree for Wednesday.
I totally should, but I actually do not. Let's go to Dollar Tree. I actually was going to throw an off-the-wall one at you. Dollar Tree down 3% on the week. Did slightly beat earnings and really call it a hit. $1.43 actual, $1.42 expected. They bought out 170 99-cent only stores, with 70 of them being in Southern California. That's kind of interesting.
Right.
Dollar Tree's interesting.
I was going to say that's some growth then, right? Like one way or another, they're expanding.
Very much so. Dollar Tree's been an interesting look really for a while now. I mean, for when their stock chart's not great. Sorry, Dollar Tree holders. Of course, when everything in your store is $1.25, how much margin can you really have at the end of the day?
Well, do you not? So again, like I said, I drove past and I saw a Dollar Tree and Dollar Store in general. Here in Canada, we have dollar stores, but they're called Dollarama and I guess Dollarama is the big one. I'm sure there's others, but have you not noticed it's not everything is $1 or $1.25. Some things are like $2, $3, $3.50. Like,
I mean, still that's not a lot of money at the end of the day.
No, but I get what you're saying. It's not a lot, but it's like you're called a dollar store and there's literally nothing there that costs $1 anymore.
I mean, McDonald's, I think, still has the dollar menu.
Well, I don't know if they do it in the States, but here all summer, and they've been doing this for 10 or 15 years now, maybe even longer. Dollar drinks. So any drink, any size is $1 all summer long.
They haven't announced. They've been doing at least here. It's $1.25 any size iced coffee. And you know what? Hey, quick tip for everybody at home: if you haven't tried McDonald's iced coffee, it's pretty good.
Yeah, it is good.
I wouldn't call it the best I've ever had, especially for $1.25 for like a large cup. It's
Right.
pretty good.
Is it as good as Tim Hortons ice cap?
So we've talked about this. I don't live near enough to a Tim Hortons to answer that question.
Oh, right. I forgot.
I did
But
see.
everybody in the community on Twitter, on X, all the financial investors, we're all going to pool our money together, and we're going to open up a Tim Hortons there for you and Savings Captain Tom there in North Carolina. Guys,
Well, God,
I think it
sorry.
costs about I'm not sure if it's even Canadian or
Outdoor
USD, but it's about $1 million for a franchise, I believe.
I was gonna say, sorry, Outdoor Finance and Tommy Wonder Wealth, who have both been on the Passive Income podcast and also live right here near me.
Oh, I was going to shout them out too, but yeah, we'll get you guys at Tim Hortons eventually. I mean, I know you see Anthony Newcomer Investors tweets about like them opening up Tim Hortons in like Shanghai and Dubai and
I have seen that, yeah.
Poor Tom is like, can't even get one in North Carolina.
That's surprising because, like, Tom, well, I mean, while it's not the state capital, I'm going to, dox Tom, the savings captain, real quick. He lives a lot closer to Charlotte than I do. Charlotte's a pretty sizable city. You would think if anywhere had it, it would be Charlotte.
Yeah, well, maybe someday, maybe like I said, we'll pool all our money together. We'll get that franchise going for you guys.
Yeah, Dave and I might have to do 2 or 3 unpaid episodes of this, then we'll open up that Tim Hortons.
That's right. That's right. As soon as that YouTube money starts rolling in, we're set. What else are we talking about here on Wednesday? Are we still before open on Wednesday? You said you had an outlier.
Actually, well, I do want to hit Ollie's real quick because I actually did kind of write them down. Ollie's is another discount store, kind of like a weird one. Up a little more than 1% on the week. Did beat earnings 73 cents a share actual, 65 cents a share expected. And that's another one. Analysts are kind of loving it. Surprising, really beat here by Ollie's, especially kind of in what they do. Consumer discretionary is hurting in a lot of ways right now. We saw a lot of analysts raise after these announcements, and big thing here, revenue, quarter over quarter revenue was up 11% for Ollie's, which is, I mean, for 2 quarters in the same year, huge. Yeah. Net revenue, or excuse me, net income up 50% from the first quarter 2024. Huge, 50% net income jump on an 11% revenue jump, quarter to quarter. Insane.
Wow.
Profit margin up 6.7% as a net figure. Absolutely ridiculous. Shout out Ollie's, whatever, man. And then you take all that as well. They're raising, especially net income expectations for the rest of the year and even into 2025, because if you can find a way to raise your net income or your net margin 50% in the span of a quarter's 90 days, you've really done something right. I don't know what they did, and I haven't really seen anybody elaborate on it yet, but man, they really did it.
Well, maybe in 3 months' time, we'll dig into that one deeper and see if they're still holding us, or going as strong.
That would be a really good one. I can agree with that.
Nice. We'll keep that one. We'll keep an eye on that one for sure.
So I do.
Are we moving to after close on Wednesday?
I want to hit my outlier real quick.
Oh, I thought that one was it. Okay, go for it.
No. Ollie's is a quite legitimate story. Well, Dave, it wouldn't be a call if we didn't talk about Doyu, the shark one.
Doyu, this one down here.
Yep. Douyu. I'm so sorry to anyone out there who speaks Chinese because I'm probably saying that entirely wrong. They are a Chinese streaming company. Think about Twitch, but in China.
Okay.
Stock is down 4.21% on the week. And man, they've been around for a while. They're actually down 92% over the last 5 years. Not looking great for them. EPS came
92% is a lot. Like
yeah, a little bit.
that's almost like it's so close to 100% that you're like, how close are you to actually being bankrupt or going bankrupt?
Very, very close.
Right.
Stock actually IPO'd back in 2019 on the U.S. markets. But man, their entire earnings over their lifetimes, like they make a lot of money and they lose it all. And they make it and they lose it. And they make it and they lose it. Negative 37 cents a share was their total EPS. 2 quarters ago, 35 cents a share, positive. It's an exact inverse. Can't tell you why. I found several articles about them, but I can't read them because I don't speak Chinese.
That is crazy though, right? Like one quarter you're earning 35 cents a share and the next quarter you're losing 29 cents a share. Like I think those are the numbers you just said. That's a extremely wide spread.
It really, really is, which I mean, I know a lot of people do not invest in Chinese companies, especially like we've talked about. I think Dave, you and I have talked about Alibaba before, but revenue was down 29.9% year over year. 144 million was the estimate. No, 144 million is what they made. 184 million was the estimate. Yeah, basically, overall revenue down about 42%, and they blame it on advertising revenue. No, I'm reading this wrong. Advertising revenue was up 109.3% this year. Margins were very far down. Yeah, basically, nobody's using the app, I guess. I don't know anything about the Chinese market. I'm sure I was wrong about some of that. One of you in the comment probably knows, or in the chat, excuse me. So please correct me at any point because I don't claim to be an expert.
No, I don't know anything about the Chinese market either, so I'm just going to leave that one alone. Let's jump into after close, and right there on top, I see everyone's favorite Canadian company, Lululemon. Maybe not their favorite Canadian company, but I mean, man, they make incredible clothing. And I know for a fact, this summer, right, Paris 2024 Olympics, Lululemon is the Canadian clothing designer or sponsor for the Olympic team this coming summer. So they've got that on the horizon, but I'm guessing you have some numbers to look at.
I did not know about that. Yeah, shout out Lululemon. And
you did not know about the Canadian Olympic thing?
I did not. I will say they're also not my favorite Canadian company. Shopify still has my heart.
Yeah, I probably have other favorite Canadian companies, but read between the lines there of why I'm telling you they're my favorite company.
Oh no. But Dave, I mean this in the nicest way. We see your tweets. We were all unfortunately exposed to where you plan to go tomorrow. We know.
Maybe not tomorrow because it's going to be cool this weekend, but coming up sometime this summer. There will be
Yeah, just scroll Dave's Twitter from the other day, and believe me, when you see the post that I'm talking about, you'll know.
You'll know.
You'll know. That said,
anyways, Lululemon is clothing.
Stock, yeah, the exact opposite of Dave's tweet. Stock's up 4% on the week. Actually, they peaked right after earnings back on Wednesday at up about 13.5% on the week, and it's been a pretty steady decline ever since. I don't really know why. I can just tell you that it happened. They did beat earnings, $2.54 a share actual, $2.39 a share expected. And hey, Dave, have we heard this before? They raised their outlook for the rest of the year in 2025, and as we know, Wall Street loves that. Diving into some of the more numbers though about it. I know they increased their stock buyback. I didn't put in my notes how much. I mean, I don't know exactly, but kind of looking at where they did revenue of 2.21 billion rose 10% year over year and solidly beat the 2.9 billion that Wall Street expected. What's really boosting the top line? So Lululemon, their growth in the U.S. North America, year over year was only 3%. But internationally, outside of the Americas, we're kind of looking at the Europe and the Asian and the Australian markets, up 35% year over year.
Oh wow! So they've made great inroads in other areas of the world, basically.
Oh, 100%, without a doubt. They said that like at least part of that was due to it, and I'm assuming that I wrote this. Right? They had stocking issues relating to color and sizes across North America, and they believe that hurt their overall growth. But yeah, okay. Actually, here I have an article pulled up now. Here it is. They are adding an additional $1 billion in stock buybacks over the next quarter or the next year. I'm assuming the next year. So yeah, Lululemon had a pretty good week. Things seem to be looking pretty good for the company, especially the international sales. Kind of still a mixed bag though, because Lulu is down 8.5% on the month, and almost 40% year to date. So while this is a nice little climb, we're still in a bit of a hole.
Right. Do you have anything more there from after close on Wednesday?
I feel like we have to hit Victoria's Secret.
Go for it.
I mean,
will do my best to remain somewhat mature.
I would say, I feel like we absolutely have to. So Victoria's Secret down almost 6% on the week, which we talked about this. Victoria's Secret was spun off into their own brand by whoever their parent company was back in 2021. Since then, the stock is down more than 63%. They're not really doing great. Up about 5.5% over the last year, but I mean, even year to date, we're looking at down almost 23.5%. They did actually post surprising profitability. Negative 1 cent a share expected came in at 12 cents a share.
That's pretty good. It's pretty good beat, right? 13 cents.
It really is. I mean, with that said, though, again, when we kind of zoom out, that is still down. A year ago, it was 40 cents a share was their EPS. Net sales were down 3.4% year over year. All sales, same store sales, were down 5% year over year. Sales in North America down 7.2% year over year. Gross profit margin down 0.2% year over year. Cost of sales up 5.2% year over year. This was I personally believe that at least a lot of what is going on with them can be attributed to retail is not doing great, and consumer discretionary retail is not doing great. This was a bad call for them, a very bad call. And trying to think of the best way to finish this without setting off Dave's immaturity. I guess I don't know. Somebody in the chat, how active is the lingerie market right now? That's not something I exactly keep my ear to the ground on.
No. So the other big news from, I believe it was Wednesday, the big news here in Canada, and you obviously saw it there, was the Bank of Canada cutting interest rates for the first time in 4 years, cutting 25 basis points from 5% down to 4.75%. And then I believe yesterday, the next day, the ECB, European Central Bank, if That's correct. They cut interest rates, and so now sort of the world is watching. What is the Fed going to do in the U.S.? What are other central banks around the world going to do? But basically, Canada was the first one in the G7 or first world countries to cut interest rates in several years. So, and I know you saw that. So, any thoughts on that? And definitely, we all know it's that battle between inflation on the one hand. That's why they raised all those rates in the first place for those basically 3-4 years, and now trying to get those rates back down for people that are trying to pay off mortgages or loans or whatever, right? And it is a juggling act, right? So any thoughts on that?
It absolutely is, and I hate to be that U.S. bias guy, but I'm going to be that U.S. bias guy because, I mean, at the end of the day, I mostly care about what affects my money. So seeing Canada cut rates wasn't exactly surprising. That was pretty in line with analyst expectations. I think the ECB
everybody was
surprised
expecting
people.
Everyone was expecting it across the board, right?
I think the ECB surprised people a little bit, but I feel like that puts major pressure on the U.S. Federal Reserve. Looking to everyone here in the States, because I mean, obviously, inflation here in the U.S. is still notably above the 2% per year that they want it to be at.
Right.
So with
and
that
just for
said,
the record, I believe it is here as well, but I think they were just, like I said, it's that balancing act of we need to do something, right?
Yeah, it very, very much is. So, Jerome Powell, I know you're watching.
He watches every week. He DMs me all the times after every Friday at 6:30 every week. He's like, Dave, great show. You and Joseph, you guys are amazing.
Yeah, Jerome was actually who introduced us to Aikido, actually.
True story. True story.
But that said, at this point, looking if both Europe and Canada have, and I hate to say it, especially heading into an election year in the U.S., because whereas the president doesn't control interest rates, he sure has a say in it. I don't see how they don't cut rates this year.
Well, that was the point I was going to bring up next. Is there's a U.S. election coming up in 5 or 6 months in November, and how do they not cut rates just to make somebody look good, right?
I mean, that's kind of which other side of the aisle you sit on, at least here in the U.S., there's kind of a playbook on an election year. You tap into the strategic oil reserves, lower gas prices, you maybe lower interest rates. You're trying to win votes, is all it is. And again, Joe Biden, Donald Trump, Barack Obama, George Bush, whoever, do not control the Federal Reserve, and they have not since Andrew Jackson was president.
I would not know the answer to that question.
Here's your fun U.S. history fact. I believe it was Jackson, but I could be. But whoever established the Federal Reserve Bank spent their entire first term telling everyone why we needed a Federal Reserve, why it was a great idea. Man, I could be totally wrong on this, but I don't think that I am. And then they got reelected, and they spent their entire second term trying to abolish the Federal Reserve. So it's kind of weird dichotomy.
So Andrew Jackson, he was a president so long ago. Isn't he the president on the U.S. $20 bill?
Yes.
So he was president in the early 1800s or
he was he was one of our first. He was between 5 and 10. I don't know the exact number.
Yeah, so he was the president a long time ago, basically. Okay, interesting. Let's move on to Thursday. We've somehow managed to keep talking this week, even though there was nothing going on. Thursday, NIO. I know you wanted to hit NIO and probably other things here on Thursday.
I mean, NIO's definitely the big one. I was just talking to somebody in your comments about this.
Probably Teddy, Dividend Dog, Teddy.
No, it wasn't Teddy. It was Gage the Fiscal Sage, which I'm just now saying that out loud for the first time. Gage, that is a phenomenal handle. I love it. But I was just saying, I want NIO to be because in your pure play EV stocks, you've got Tesla, you've got Rivian, you've got NIO. And that's really about it. I mean, those are your three major players. And The only one who's doing anything is Tesla.
Right.
I want NIO to be a threat. Either NIO or Rivian. I thought it was going to be Rivian for a long time, but I really want NIO or Rivian to be a threat to Tesla so bad. But they keep just, not
just
doing
for the
that.
aspect of competition, right? That's all you mean by that.
Exactly, 100%. Like, I mean, no exact hate to Elon or Tesla or anything with with their cars or anything they do, but like, I'm a firm believer competition is healthy for the consumer.
Yeah, well, it 100% is, but it's also, makes a better product, right? Like, because if these companies are competing to make a better, they have to make a better product to win the competition or to win the consumers. So, and exactly like you alluded to, that competition also generally should create better pricing for the consumer as well.
Yeah, no, it's really a win-win. But yeah, I want NIO to be a threat so bad, and then they do it again. Stock's down 10% this week. Stock is down 46% year to date. Down, actually up 61% over the last 5 years. That's weird. Down 20% since IPO. Negative 33 cents a share. They're a money losing machine, which I'll give them this. Like, I made a joke the other day, or maybe and again today on X, Twitter, whatever you want to call it, that like Rivian and NIO are on like a race to the bottom. But let's take a quick comparison. What did Rivian lose last quarter? Because I'm willing to bet it was more than 33 cents a share.
I did see you post that about it being a race to the bottom for the two.
Yeah, Rivian lost over. I don't have the exact figure in front of me. Rivian lost over $1 a share. Whereas let's pull up Tesla's most recent earnings, and wow, they're profitable.
Right.
It's not close. It's not close at all. And I want NIO. I want Rivian to be a threat. So I really want Rivian to be a threat because I would do a lot of things to get my hands on a Rivian truck. But NIO, who we're talking about this week, revenues down year over year. They post revenues of 1.37 billion, which I guess isn't like that bad. Revenue though was down 12.2% year over year. They delivered a total of 30,053 vehicles in the first quarter of 2024, down 3.2% year over year. Revenue from vehicle sales 1.16 billion, down 13.4% year over year. Lower delivery volume, lower sales. Other sales, I don't really know what that is. Maybe they have their own charging. I don't really know. 211.5 million, which is really just kind of flat. And this is kind of also where we get a little interesting with this. Gross profit was 67.6 million, which was up over 185% year over year. Average margin on a vehicle sold was up is 9.2%. So for every $100 in vehicles they sell, they make $9.20, which I have no clue how that compares to anybody else. R&D cost just under 400 million, down 12% year over year. Selling, administrative, and general costs 415 million, up 17% year over year. Long-term debt $1.6 billion. Projected deliveries for Q2 between 54 and 56,000. But that would actually be an insane number because that's between 130 and 140% increase year over year versus Q2 2023. We'll see. I mean, that'd be 2.3, 2.4 billion in sales. So again, today this is pure copium, and I know it is because I don't even want a Rivian exactly. I want competition. If NIO, if their projections are good, I mean, net profit margin on sales is up. That huge increase in expenses is ridiculous, but R&D, maybe it's a little down. Maybe they feel like they're getting closer to refining their product, but with net margin on a car on their main product being up and a projected rise of like 130% in deliveries year over year, maybe the future's bright. And I say maybe, and maybe is a very, very strong word. But I don't know. Like, I'm sorry, Victoria's Secret car was bad. It was, and I
Yeah.
personally do not see. I firmly believe that Victoria's Secret is in a death march. Firmly believe that. But maybe Neo's got a shot. I don't see, when I look at Neo, I don't see a great company, but I also don't see one that's poorly run. And maybe, just maybe, they've got some hope. Because I mean, if we back up into like the macroeconomic environment, EV sales in the US right now are probably the worst they've ever been. I mean, since they've really adopted the market. Ford can't sell their EVs, Toyota can't sell their EVs. Actually, the hybrid sales have actually been going up recently. Dodge can't sell their EVs. Um,
We're seeing the
so
same thing here in Canada with the
yeah,
hybrids kind of outperforming in sales.
so I mean, maybe we're just not ready for EVs yet.
Well, the big thing here
I
in
don't
Canada, I've
know.
been reading articles this week where actually the sales of EVs are outpacing the charging stations. So people are kind of
Really?
taking a second look, going, "Oh, well, I can't." If you're in a major center, like if you're around Toronto or Vancouver, yeah, you're gonna have chargers, but there's no way you right now you could drive from Thunder Bay to Winnipeg. I haven't driven that stretch of highway in years, but it's a 8 to 10 hour drive, and I'm guessing there are zero EV charging stations between those two cities, right?
I don't know. It's definitely worth a question because I'm probably about 5-ish years from my next car. And if you were to ask me today, it'd be a hybrid, but a lot can change in 5 years.
Right. Yeah, my truck is only 22 years old, so I'm about another 22 years away before I buy another vehicle.
Yeah, I would like a truck. That's where my car. I think I have like one more year till I pay it off, and I want to drive it until I can't. Um,
Yeah.
which might be 10 years.
And
We'll see.
I believe that isn't Neo the company that does the battery exchange as well? So you don't even have to wait like the 30 minutes for a charge. You just zip into a place, 5 minutes in and out to change the battery,
I did not know
if I'm not
that.
mistaken.
No, yeah,
You
you
said
are
that the last
total.
time we talked about Neo.
Oh, it's Dave. Let me tell you, my man, it's been a week. But yeah, it sounds like something I would have said. But no, yeah, you are totally correct. That is exactly what it is. Interesting.
Yeah, so that I think that's an interesting take too. And sort of going back to your competition statement, it's sort of that different angle on competition, right? It's like, oh, you have to wait 30 or however many minutes to charge your Tesla or your Rivian. Well, we can have you like, how long does it take to change a battery? Literally 5 minutes, right?
Yeah, if that.
Yeah. I guess the one big negative on that, and I might be being shallow on this, and I probably am, but you would lose all of your radio preset stations.
I mean this in the nicest way. How many people use the radio anymore?
Okay, well, whatever you're listening to, even your no, I'm serious. Like whatever you have going on in your vehicle, whether it's the radio or podcasts or
Oh no, you're. I
whatever
mean,
else.
you're totally right. And like, I'm not a tech guy. I don't claim to be a tech guy. I am sure there's a workaround for that. Don't ask me what it
No,
is,
there
but
really
I'm
isn't.
sure there
There
is.
really isn't. You take the battery out of a vehicle and you have to reset everything. Everything that's electronic in that vehicle is running off that battery, right?
I would think, but again, I don't. I sit behind a computer all day and I send emails. I don't claim to be on the cutting edge of tech.
What else are we talking about here on Thursday? Because I see we're already running out of time. I know you need to get
Um,
going here in the
uh,
next 10 or
I,
15
I,
minutes.
I'll say actually that has fallen through. I can stay later now.
Oh, all right. So, Toro, rototiller maybe for digging up. You need to get a rototiller to plant all your garden there. You've been quite the green thumb this week.
I have. It's been nice. I am. I'm hoping. I'm so. The second I hit my FI number, I'm never going to talk money online again. It's going to be all gardening and trees and hiking. Give me about 10, 15 years, and you're never going to see me post about stocks again. It's all going to be look at how good my tomatoes are coming in.
Awesome. Love it.
But while I'm still in the stock portion of my life, let's hit Big Lots.
I was gonna say Big Lots. I see right below Toro is JM Smucker. Everybody loves a good jam. Yeah, some interesting things there before open on Thursday. After close, we'll get into DocuSign, I'm sure.
I
And
think
then we'll skip over to Friday here once we get to it.
I got Big Lots, DocuSign, and Roaring Kitty. Then we're done.
Sounds good.
Big Lots, man, you guys lost $4.51 a share. What the heck happened? That is
$4.51 a share.
That is, yeah, they're down 25% this week.
Ouch.
They were only estimated to lose $3.91 a share. So they missed earnings by 60 cents. I posted this like when you and I were talking about this. So you post your thing. I didn't realize Big Lots was publicly traded this week, and I was like, man, I don't feel like Big Lots should be a publicly traded stock. I'm just saying, when
you seem to say that you seem to say that a lot, and I get where you're coming from. Like, why are these companies even listed, right?
I'm also a very firm believer that a lot of companies should just never go public. Like,
right.
hot take. Two companies like that I think are going that do extremely well because they're not public. Public supermarkets for all my friends down in the Southeast U.S. and Chick-fil-A. I think both those stocks, or both those companies, who are both absolutely thriving right now, are way better off by not being public. And I think a lot of other companies could really take suit or take note of that. Like, not everybody needs to be public, Fiverr. Had to get that one in. But yeah, you're down 25% on the week, 65% on the
I just realized what you said.
Yeah.
Fiverr.
Down 90% over the last 5 years. Down 81% since your IPO in 2000. Man, it is not looking great. It is not looking great at all. And you look up like Big Lots earnings and you try to, believe it or not, I actually do some research before these calls. Big Lots. You look at their article and they're like, why is Big Lots stock dropping? Why is Big Lots failing? Why is Big Lots in a nosedive? Man, you guys didn't win anything. Like, anything. I don't even know what to say. Like, I thought Victoria's Secret's earnings call was bad. But
this one was worse.
Like, and it's hard even finding like a good article on what they did wrong, because the answer is just everything. Like, and I hate to say that because I do quite like Big Lots. I am a proud Big Lots shopper. But
I don't even know what they are. We don't have them here in Canada. So.
You're not missing much. They're really like not bad for what they are. But I can't find.
This sounds like another big box store to me. Like nothing.
It's another one of those like very discounted big box stores, like like Ashley Furniture.
Yeah.
So when Ashley Furniture has stuff that aren't in their collections anymore, they sell it to Big Lots, then Big Lots sells it.
Oh, I see.
Like they're that.
So basically, what they're doing is discounting stuff way too much because they're losing money hand over fist at this point.
Yeah, basically. Which I mean, I can only a lot of my house furniture has come from Big Lots over the years.
Yeah, well, wouldn't if they're selling it to you like well below what they're buying it for, right?
Prime example. This was like 2 weeks ago. We're couch shopping. We are between couches right now, and we found one we liked at Big Lots. Which incompetence on Big Lots' part is what kept us from getting it. I'm still a little mad about that. It was a sectional that comes in half, and we reserved a sectional for us to go buy, and they reserved us 2 left halves but no right. How they screwed that up, I'll never know. But that means there's somebody out there with 2 right halves of that sectional who brought it home and never noticed. But either way, back to the point. Like, for example, the couch we wanted, and we knew we liked it when it was at Ashley, even though we could never afford it, because it was like $1,600, $1,700 at Ashley. Big Lots, when it got off Ashley's floor, that Big Lots bought it for $400. and then was going to sell it to us for $650.
Right. So
That's
$1,000
not a,
savings for the same couch.
yeah, that's not a bad deal from a consumer perspective. And at that point, Big Lots is still hitting, what is that, like a 60% profit margin on it?
Right.
But I mean, I don't know. I don't know if sales are that far down, if margins are that far down, or they need to increase prices, whether they need to increase customers and foot traffic. But whatever they're doing, it is not working. It's not working even a little bit. But
Let's skip
hey,
over to
that's fine.
Yeah, let's skip over to DocuSign and then we'll get into Friday. I don't even know if I'm going to bother bringing up the Friday thing because all we're really going to talk about from what happened today was the whole Roaring Kitty thing, obviously. But I know you wanted to hit DocuSign before we got to that.
Very, very shortly, DocuSign's another one, which was kind of an interesting call. DocuSign down 8% on the week. Did slightly beat earnings, 82 cents a share actual, 79 cents a share expected, which, wow, always surprised me when I get reminded that DocuSign is like wildly profitable for what they do, which, to be fair, I mean, what's your, for one, who's your competition, and two, like what are your costs? I mean, it's
Yeah,
DocuSign.
everything they do is digital, right? So there's like low overhead, and you get this like basically, I guess, like a subscription service that I've used it. It's good.
Yeah.
Realtors use it. People use it. It's good. You sign documents. They're legally. They're all legal, so they'll hold up in court or wherever you might need to present documents. And
Oh yeah, I'll advise. And we closed on this house about 3 weeks ago. More than half of our closing documents were DocuSign.
right,
So yeah, so DocuSign, another one of those. I mean, they're really just chugging along. I mean,
yeah,
they're 10% year over year revenue growth. A year ago they lost 49 cents a share. Now they're making 18 cents a share. Huge growth. Basically, what people say is making like them mad is DocuSign has not adopted AI yet at all, and investors want them to do it. And they actually bought out earlier this year an AI company called Lexion, Lexion. So they're going to do something with it. I can't, for the life of me, imagine what DocuSign is going to do with AI, but they sure did. They bought him.
Interesting.
So that is all I got for Thursday. So if we can hit Roaring Kitty and the early GameStop earnings for Friday, I'm happy with how this is going.
Yeah, I will quickly share here the Friday that we have nothing to talk about, and I'm just going to close that. There were a couple calls before open today, and we really just want to get into the real meat of the day, which was what happened with everyone's favorite kitty cat.
Wow. Second favorite.
So, second favorite.
My my wife watches The Neighbor's Cat. That's the best cat in the world. But yeah, second favorite. Roaring Kitty did a live stream at noon today. It showed up half an hour late, covered in bandages and in a sling. And
Noon Eastern time, we should point out.
Yeah, well, the only time zone that matters.
For us,
man.
yeah.
Oh yeah. Sorry, Akito. What a guy. That's all I'm gonna say is like if you didn't tune into his just look at a picture of Roaring Kitty like 3-4 years ago versus now. Dude's just chilling.
Yeah. Well, that's what happens when you turn $53,000 into $250 million, right?
I'm about to say, his portfolio at end of stream today was worth about $350 million. He was down $220 million because he was 100% all in on GameStop, which is down a little more than 40% today. Still up 24% on the week, but I mean, primarily due to halts at different brokerages.
Yeah.
And I think even maybe
Twitter. So I was at work today, so I was I couldn't watch the actual live stream, but I was sort of scrolling Twitter on the side, and somebody mentioned that there was like 7 halts during his live stream.
Oh yeah,
7 halts on GameStop.
There were more than 600,000 people in that live stream.
Yeah.
Absolutely insane. And kind of while we're on the topic, GameStop was trying to take advantage of that by issuing more stock, 75
Yeah, they
million
issued what,
shares.
75 million more shares last night, right? Or before
Yeah,
open this morning.
yes, correct. Which they already did 45 million last month too, which is interesting. I mean, so they've issued, what is that, 120 million new shares this year, that's a big number.
Yeah.
So if we want to hit kind of GameStop earnings, let's see what Roaring Kitty has a bull case about. GameStop lost $32.3 million during the quarter. They lost $50.5 million the quarter last year, so I guess things are getting better. Net sales $88.1 million, down 29% though from $1.24 billion same quarter last year. I don't really have a lot because I use a lot of API trackers to basically get my numbers, but GameStop earnings, they haven't done the full call. They just released the numbers, which for the record, a lot of people were calling fishy. However,
Right.
we come around to, due to SEC regulations, GameStop could not release new stock until they release their earnings. So, which I don't even know what to say, man. It's what the heck is happening? Like GameStop, this wildly unprofitable retail company, which we've already talked about 2 or 3 more on this call, and a very niche market that is getting its lunch eaten by Nintendo's eShop, Sony's eShop, Best Buy, the PlayStation Store, Amazon, massively.
Online too, like just online downloads, right? Like,
Yeah, exactly. Like, I mean, I consider myself like a moderate gamer. I mean, I hit probably a new game every month, every couple months or so, but like,
so
I can't tell you
does
how many
GameStop have an
years
online store where you can go and download games?
they do not. All the like your PlayStation, your Nintendo, and your Xbox have that in house. GameStop's got an online store where you can go and order games and stuff to your house, but that's about it.
That seems like so 10 years ago, like, like getting buying a DVD or something. Why would you buy
I
a DVD when you can just watch it on Netflix or Prime Video or Disney Plus? But it seems like a very similar thing. Like, why are you getting a physical game when you could just get it online, right?
and like a lot of people are like, well, it's not GameStop's heyday anymore. But I mean, other than like their 2007 little rise there, GameStop's been a penny stock really since day one. Until Roaring Kitty came around, GameStop had never seen a share price over 15. They'd never even hit $16 a share.
Right.
So when the stock suddenly hits $82 a share in 2021, and it's currently sitting at almost $28 a share now, what the heck is happening? Like
Yeah, well,
I guess
obviously it was very interesting the first time around, right? In a few years ago, 2020 or 2021, that first like meme stock craze, and Roaring Kitty, aka Keith, well, his real name is Keith Gill, right?
deep fucking
And he
value.
deep effing value. It's just obviously a crazy run up of what happened then, and like are they trying to repeat that same run up now? Who knows? I guess maybe a little bit. It did not happen today. I think people were maybe expecting that with his live stream today that the stock price was going to run up. But with those 75 million shares issued last night, it like the stock went from 60 or 65 down to 40, 42, right?
Oh yeah, I mean, hey, that's just straight up how dilution works.
Yeah, exactly. And then I guess my next question is, and I already kind of know the answer is no, but will they ever be able to buy back any of these shares?
No.
Yeah,
No,
so
not
that's what
not
I said.
no.
I already know the answer is no, right? Like,
Well, I'm sorry. If you're issuing 120 million new shares a year, I'll hand it to GameStop. This is like a once in a lifetime chance to issue new shares. They'd be stupid if they didn't. But like,
right.
the other side of that is still like, man, you issue 100. No one issues 120 million new shares because they're at a good spot.
Right.
Just saying, like, issuing some new shares makes sense, but 120 million. And
Okay.
what do you do
I
with
see
that
we're already well
capital?
over an hour here. We got to skip to one more topic. NVIDIA stock split.
Oh yeah, Nvidia stock falls 90% today. I'm waiting for you to correct me on that. One share was $1,200. Now it's 120. What happened?
Yeah. Well, that one share that you bought for the 1,200, you now have 10 shares.
Yeah. And a 1 cent a share dividend payable June 28th.
Ooh, show me the money.
Turn that cash register around.
Right. Well, yeah, no, interesting. Obviously, NVIDIA. I know that was happening after close today, so I'm sure we'll see that on when markets open on Monday. The reflection of
Yep.
the NVIDIA stock split.
Oh yeah. Shout out Jensen Huang. Just what a guy. I'm gonna bring up one last topic, then we can sign off.
Sure.
Did you see Jensen Huang, what he's been up to lately? CEO of NVIDIA?
Oh,
And like how he signed that, like the dude's just a rock star now.
I was about to say, he's signing autographs like a rock star.
He signed that woman's chest, which somebody out there find me a nerd CEO like Jensen is. I have met Jensen. I say met. We were in the same room and I went to one of his talks. Dude's a nerd, which is cool. I mean, he's obviously doing extremely well with the company. But man, find me another nerd CEO out here living that kind of rock star lifestyle with his leather jacket and his new tattoo.
Yeah, awesome.
What a guy.
What a guy. What a guy. Well, with that said, here we are coming to the close of another week here on the Weekly Close Live on the Passive Income Podcast. As always, Joseph, I appreciate your time. I appreciate all your efforts, and it was great chatting with you again this week. And we will see you here again next Friday at the same time every week on the Weekly Close Live, Friday at 5:30 Eastern Time.
Yeah, and thank you everybody
so much
for watching.
for everyone for. I was just saying the same thing. Thank you so much for everyone for watching. And if you are watching on YouTube, be sure to subscribe. If you're following along on Twitter, hit that follow button. Follow Joseph as well, obviously.
Hey,
And we will
I
see everyone
appreciate it.
again next week.